Hello, everyone, and welcome to today's NinjaTrader Ecosystem event, Trade with Discipline Manager. My name is Juanita, and I am the NinjaTrader Ecosystem representative here in the Denver office. Before we get started with today's webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be sent directly to the NinjaTrader brokerage. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn the mic over to Steve, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all funds or even more than your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. If you have any additional questions or for more information of the CFTC risk disclosure, please use the following link. Always, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thank you again for joining us, and without further ado, it is my pleasure to welcome to the NinjaTrader room, Steve. Go ahead and take it away, Steve.
Hi, Juanita. Well, first off, thanks for the introduction. I'd like to take this opportunity to thank Ninja and everybody who's here to just give me the opportunity to introduce the Discipline Manager. My hope and intent is that it will help other traders overcome some of the struggles that I've had, and I still have from time to time, not as much, but I still deal with the psychology part of it. And so that's how this really came to be, is just the groups that I'm in and the chat groups and whatnot are just traders helping traders. And I can't tell you how many times I've leaned on others to ask for technical help or something. So I appreciate that, and if I could do it, then I'll pass it on. So in any event, a little summary of what we'll talk about. What is and do you even need the Discipline Manager? I'll give you a little introduction to that, and then show you how to establish your rules, basically the settings in there based on what rules that you're dealing with. Give you some examples of what will happen if you breach those limits, and then the cost of the Discipline Manager and how to download it, and then answer any questions that you might have. And we'll cover those as much as we can. First and foremost, I am technically not a official professional trader type of thing. I'm actually retired from the fire service. I retired a few years ago, but I would say probably maybe 12, 15 years ago, I got the bug, and I started with stocks and options and went through all those and blew many accounts, etc. But somehow I landed in futures, and that's kind of where I call home, I guess. I might dibble dabble around a little bit in the other stuff, but all in all, I'm just a trader like everybody else, and I've had those same struggles. And that's actually how the Discipline Manager came to be, is because I'm like, there's got to be a way to stop me from me. That picture there is just from a tour. I would have loved to have been a runner or be down in the pits like some of these other presenters that are here from different companies, but I don't have that. I just trade in my trade cave and go from there. So I'm a little of everything. So I know we need to cover the disclaimers already, but I just have it part of the slide presentation. I'm certainly not going to bore you with reading it. If anything, the Discipline Manager is on the contrary of all other strategies and other information that you get out there. If anything, the Discipline Manager prevents you from trading. So technically, I don't feel I even need a disclaimer at all, because it's stopping you from trading, really. And it's all about money management and statistics. 90% of the traders fail, and break it down, 80 lose, 10% break even, and then a small portion actually makes some money. Now, whether how much that money is here nor there. It's all in what you feel it is, your amount of money that you need and your account size and what you trade. That's all independent. But psychology, and there's a lot of information and books, and the late Mark Douglas had all kinds of information on that. I've been through all that, and I still get the emotions. And it's the hope, the greed, the fear, the regret, all that lack of planning, all that. No plan is a plan to fail, somebody once said. And the information, don't take my word on it. You can just get it right out of Google. It says right there, 90% of the traders fail. And that's where I'm getting my statistics. So it's no surprise that it's a lot of people kind of come into the trading market thinking, oh, I could, just watch the market for 20 minutes and make all kinds of money. And it's just not quite like that. It takes time, like anything. Whatever it is you want to do as a profession, it's going to take time. And if you're going to treat this as a profession, not so much as a hobby, then you have to treat it as such. And that's dealing with emotions and rules and things like that. And if you're the owner, the boss, the CEO, then you've got to have those. And some of the main things you probably already know, if you read some books or been to some of these seminars in here, they talk about having the plan, and limiting your losses, percentages, and how much of your account size, and if you over leverage, things like that, over trading, which was my big thing when I first started. Fear of missing out, fear if you get in or fear if you get out, either way. And then waiting for the trade. That was my biggest thing, is just waiting. So all those kind of things kind of lead up to it. And then if you take a couple losers, then you got the psychological part in there, and it just it's just a never-ending cycle that you've got to master. And that's over and above the actual trade, meaning, when do you feel that you should get in based on your indicators and based on your, procedures that you're looking to get in at. So you've got to learn all that too. So it is definitely not not just a quick hobby. But fear, fear is the big thing. And, cutting those winners short, and, in fear of giving back the profits, hesitating, pulling the trigger, just you're afraid of loss because the last two trades you took, you lost, and now it's setting up again, but you're hesitating, and you hesitate a little too long, and now now it's half over already. Or I know I've done it, and I'm sure that somebody out there has done it too, is hanging on too long. You hang on to your trades too long because it's going to reverse, so just a little bit longer, and you push that stop back a little further, and then a little further and a little further, and then pretty soon you're in pain, and now it's like, oh, just get me out of this, I can't handle it anymore. I've been there. Jumping into unplanned, that's what I call the board trade. I call it the board trade because or the revenge trade, things like that. But I see it as a board trade. You're bored, you're running out of time, it's starting to become lunchtime or something, and the market's not cooperating on your clock. So you say, well, I'll just take one in now. It's missing a few rules, but that's close enough. And then you get in, and of course, it probably doesn't go your way. So all that stuff, it just builds up. And so you've got to define all those rules. There's all those rules as far as, when to get in, when to get out, how much you're going to leverage. And then the psychological part of it is what happens if you do get out. And that was my biggest fear. My biggest thing was waiting. My worst four-letter word is wait, sitting there waiting for the setup. And I can't tell you how many countless hours of screen time just looking at it. And then you start doing multiple instruments, so you could look for your great setup on multiple instruments and which one comes first. And now you see them everywhere, and you just have to wait, and you just got to get the right one. And that was my biggest issue that I had. And that's where I came in with, the over trading. I would just take it and then get out, take it again, take it. Well over 100 trades when I first started. It's like, I got to get one of these, but, commissions, so my biggest thing is the waiting. And I'm sure everybody has their own little issues that they have with their psychological part of it. But psychological and psychology and discipline, they kind of go hand in hand. You can read there's a lot of books out there and a discipline and rules and things like that, how to deal with losses. We even had some on this group here. We had some psychology. We had a doctor come in. We did 2 classes on 6-week courses, and we would meet for an hour and a half for over 6 weeks. And we talked about psychology and, as a counselor, a doctor, shrink, whatever you want to call him. But, they talked about, I got the idea from Mark Douglas, basically, where he would go into these big firms and whatnot and talk about the discipline and the psychology of it and the probabilities and things like that and how to overcome it. And so, getting in too quickly, like I just talked about, holding on too long, skipping trades, because you're afraid, over trading, all that kind of stuff. And somebody said, and I kind of grabbed onto this, I can't remember who said it in some conversation, but it came out in the conversation and I grabbed it because I loved it. And that is, the discipline manager cannot help you with your psychology, but it will help you with your discipline. And that will then lead to a healthier psychology. And I love that little saying there. So I grabbed it. So the main thing is you got to control your losses. Whatever your average winning day is, everybody has, if you're trading micros or minis, whatever it is, everybody has their own pain tolerance of how much you can give back and what it may be. But you've got to learn to say, hey, look, it's just not my day. Things aren't going this right. I've hit my limits, and you just got to give up and call it. And you want to surrender the fight, but not the battle. That's been used before, so I thought it would be appropriate for here. And as I say, it's just a matter of being able to survive another day. And you start doing some revenge trading and over trading, and next thing you know, you get deeper and deeper, and that you're just digging a hole. Everybody has different account sizes, as I mentioned. So whatever your percentages are based on your numbers is totally something that, again, you as an owner have to kind of put together and realize what it's going to take for how much you can put on, how many contracts, etc. Warren Buffett once said, rule number 1, never lose money. Rule number 2 is never forget about rule number 1. And that's so true, because you just can't get it back. And it's just so easy to just blow the account. And if I took a poll right now, I'm sure it would be a high percentage of people that have blown different accounts, small ones, big ones, whatever it might be. But yeah, so you gotta protect the nest egg. And so the choices you have are the big wins, the small losses, and the big losses. And it's those big losses are the ones that you really got to control. A big win, I mean, who doesn't like a big win? I love the ninja cha-ching, cha-ching. I mean, I just could, it still gives me goosebumps when I hear it. I love it. The small wins, okay, those are great too. I'll take them. The small losses I can deal with, okay, maybe started to go your way, but then you got out at, break even a little less or something like that. But it's manageable. But those big losses have got to be controlled. And my theory is that what I've started doing a long time ago was, you put on your stop, and if you get popped out, then let it be, let it go. I'd rather be, out of a trade wishing I was in than be in a trade wishing I was out. So it's so easy to get right back in. The brokers love it. So all you have to do is, if you get out, it didn't set up. And if you look at it and now you're out, you're flat. So you have no pressure on you. If the market is still setting up and you still think it's a good trade, it's so easy to get right back in again, maybe even at a better spot. Or you might look at it again now that you're flat, you don't have any emotions involved, then you look at it again and go, yeah, I'll let this, I'll just let it go, and I deserve to lose that one, and let it go. And so that's just a matter of discipline, and that hence is the problem, at least is and was for me. So stop losses should be treated similar to an insurance company. You certainly don't want it on there. You don't like to have it on there. You don't want to use your insurance policy if you get in an accident, but in the event that it's there, your stop loss will, protect you. And so, you never want to use it, but it's a good thing to have. And then as far as the risk and reward ratio, a lot of people talk about risk and reward, but really, what is the reward? How do you define the risk if you don't know what the reward is? Because every trade has a little different. You don't know what this trade's going to bring. You know, how many times have it hit a small target and then it just keeps going, and then you try to jump back in again and you've maxed out. So nobody, that's just a number, a reward that nobody really knows what it's going to be. Nobody could predict the market. If they actually knew what the reward was going to be on all these trades, then they could set a risk to it. But that's the question that you don't know. So the risk side of it is just something that you've got to deal with, and that's the stop loss. So you put your stop loss in there, and that's where you kind of determine if that's where it's gonna if that's where it's gonna be. So that's a question that I'm leading to, is that stop loss, and I'll get to that in just a second. But each trade market has different characteristics, and you need to know, everyone's different, so you need to know what you're trading. I like NASDAQ only because I feel the need for speed type of thing, and I like the adrenaline on steroids type of situation. And again, I don't like that waiting if I haven't mentioned it. So I like to have that action. If I'm in or I'm out, it's done. It's a little bit more on the danger side, I agree, but again, it's what you need when you have a high adrenaline kind of thing. So, but you don't want to move your stop. You don't want to keep going back and back and back and back. And so that was one of the questions that came up, is that it came to me because for future versions, we're always looking, we've had different versions out now. We keep adding a few more toys to it. And it was addressed to me or asked to me about having a stop. I call it like a stop lock, or a stop. I don't know what the proper name is going to be, but I guess you can call it a lock. In any event, in your settings, do you move your stop too far? And actually, Juanita, if you could throw that poll up there, I'd be kind of just interested to see, do people move their stops, and do they move them too far? And you keep moving them back. And so there's a poll there that you could take, and if it's we're talking about implementing that inside of the discipline manager, so it won't totally prevent you from doing that, but we're trying to kind of come up with a way that if you set this, you could put a amount, let's say, I'm just hypothetically, say 20 ticks. And so you'll give yourself 20 ticks of variance to move your stop back and forth. And if you move it too far, then it's just going to pop you back and put it back into that max allowed spot right there, because you can't move it in the heat of the motion. Now, if you want to have a bigger stop lock, then you could always change your settings at a later date. You just can't do it now while you're in the trade. So it kind of forces you to stay within that guidance. And if you don't want to move your stop at all, then you would just say 0. My stop is my stop is my stop. And if you try moving it back, then it goes right back to wherever your stop was originally set, and it stays there. So that's what it is. And so if that's something that you feel that would be nice to have implemented, then we would certainly like to get the feedback on that. And the other one is this. So let me ask you directly then. There's another question there. One final question is this something that you feel that you have a problem with, to the point where if it were available, it would be a good tool to have for future editions? We don't have that right now. We just started talking about it not too long ago. But if this is a feature that you could see, you're being beneficial to you, then by all means, then I can't imagine it's going to be that difficult to put in. So I'll just give you a quick second to answer that survey if it's something that you'd like to see for future editions. And if anybody has any suggestions, some of the things that are on here came from suggestions that we've added. And so the main thing was just me with giving back too much money, and but then it got into the how many contracts I want to limit that, and how many trades for over trading. And so we can close that thing. I think I got enough. We'll go from there and see how that goes. Let's see what does it say here. Let's see. So yeah, 83% said yes. So it sounds to me that a lot of people then, or at least 83% in this room, I don't know how many people are in here, but 83% of the people in this room say, yes, I have a problem moving my stop. Okay, well, I've got an easy solution. Just don't do that. Unfortunately, it doesn't, it's a little easier said than done. So we go back to the overtrading, revenge trading, impulse trades, all that business. You've got to be able to master it, but you can't give up. You can't give up, because I truly do believe that, you know, you're almost there. And it took me a long time and a lot of money and a lot of indicators, a lot of, you know, different, you know, videos and countless hours of screen time. And, you know, so it's not going to happen overnight. So hopefully you want your equity curve to kind of go up like they all do. And so it comes with experience and time. And so for the new people out there, if you think you're going to do this in a month, you know, I hate to break the news to you, but it might be a little harder than you might think. It's not hard. Don't get me wrong. It's not hard. It's just there's a lot. And if you could just eliminate one portion of that, you know, you got to be able to protect yourself. And that's where the, you know, your personal trading manager comes in. Everybody has a manager. I mean, look, Michael Jordan had a manager. All these big people have managers. So that's what it is. If you could eliminate that as something to deal with and have to deal with at the middle of the day, then you have the ability to, you know, trade and concentrate on your setups and that, and not worry about if you're always going to be worried about it. But the point of it is that as long as the manager is not tapping you on the back, then you should be able to handle it. And you've got to treat your business like you're the CEO. So this is how I kind of come to do that. You're the CEO, and you have to make these decisions, how much you stop, and based on your account size and how many contracts you can do, et cetera. And then you're going to hire an employee to make trades for you. Well, that employee that you just hired is you. So now you've got a different hat on. So the CEO, you hire the employee, which is the trader. So the trader takes these rules and now goes and trades based on, you know, the setups. So the trader, you learn and understand the setups and how to, you know, move the technology, the ninja, you know, the scales up and down and all the buttons and colors and things like that you have to learn. But now you, as the CEO, have to answer to your shareholders, hence your spouse. So therefore, you hire a manager to police that. And if you don't think that these big firms have managers that do just that, you know, when somebody's having a bad day, they tap you on the shoulder and say, you know what, take the day off, you know, or you're having a really good day, you're way up, you know, again, take the day off, chill out, you know. So it's the same situations that you want to be able to have somebody be able to, you know, tap you on the back when it's time, so you can concentrate on trading. And once you set your rules, and it's rather going to be at night or on the weekend or something like that, when it's calm, cool, and collective, and you're going to set your rules, you're going to know your stops, your drawdown limits, your dynamic rules, and things like that. And I'm going to go into the settings now, and we'll talk about what they are. But once you've reached your goal, obviously, if you hit your stop, then it's going to stop you. But the point of it is once you hit your goal, then what? Well, again, that depends on you. If you want to continue to trade, you can, but you don't want to give back, you know, all your hard-earned money. You won't, maybe your percentage you'll continue to play with. Although you might prefer to be the person that says, you know what, when I hit my goal, I want to be done. And that's fine too. You could just say, you know, 0% give back when you hit your goal, whatever it might be. And that's what I call the dynamic drawdown. So once you move up and you, let's say $500, and you know you hit your $500, now you're only going to give. Now you're safe. It says your drawdown limits are, you know, apply, and we'll go through the settings and go from there. And if you start getting too low, warning boxes appear. If you want, the warning boxes will appear, pop up, and say, hey, take a 15-minute break because you're, you know, starting to lose a little money. So go, you know, get some coffee and come back. So this is not an indicator that is. This is not an indicator that's placed on your chart at all. This is you know, on your control center, you pull it up under new, and it's a separate thing. You don't actually have to have it on at all. Now I like to have it on so I see my stats down at the bottom. I just shrink the window down to about 2 inches, and then I just scroll to the bottom just to get the stats on there, because I like to see the peaks and things like that. But you don't even need to have it on at all. So it runs in the background in a separate window. So let's say you have your drawdown, you have a drawdown warning at 350, and your halt is set for 500. So your warning comes along, you start to go down and you've hit 350 bucks. Well, what'll happen is that you've breached your 350. Now this is based on realized. There's a checkbox that you could, if you want to check with unrealized P&L. But these scenarios that I'm giving you, what I do is the realized. So you've gotten out of your last trade and you lost it, and now you're down 350 bucks. And so the discipline manager says, hey, it's circuit breaker, kind of like the stock market. It's a circuit breaker, and you got a 15-minute timeout. If you try trading, it's just going to take it right off. And if you think you're going to be faster than it and do a market order just to get in quickly, well, you'll get in and it'll take it right back off again, and you'll get hit with a commission and maybe some slippage. So that's what's going to happen. You're going to get your warning. It's going to say, hey, you're halted trading till whatever time, and go take a break. And that's just the warning that you get back, and you're not going to be able to do it. So after 15 minutes, you come back and you go, okay, I got a new head. I've done the trade that I was kind of getting flustered on has now moved away. And now we're talking about a new setup, and here it comes one. And it'll allow you to continue to trade until you actually keep going down. And now you've breached your 500. So now you take another few more trades and you still lose. You breach your 500 bucks, you're done at that point. It's just going to give you the warning that says, hey, you're halted, and come back tomorrow. Live another day, because your CEO of the company said this is all you're allowed to lose for one day. So there was a lot of question about resets. Well, how do I do a reset? I'm in the heat of the moment, and some people came in with suggestions about putting a lock on there, not allowing you to reset it. Just no, that's it. We kind of came back and forth with that a little bit, and the problem with that is if you're the CEO of your account and you're trading, and you want to have your trader trade for you, but now you can't because you're locked out of your own account. I know I'd be a little upset too, and we're not going to get into that business, but you have the right to fire your manager. So as the CEO, not the trader. So the CEO can't fire. So what that means though, and I would not recommend it doing in the course of the day. I would do it if you want to reset your values, your numbers, because they're too tight or wrong. You do it at the end of the day on a weekend. You rationalize it. You think in a calm setting. You reset new numbers. And then you apply them, and then you go start the next day or next week with new ones, and it's down at the bottom. Somebody suggested putting a lock on there that you can give your spouse a password, and you give it to your spouse, and so therefore when you break it, you say you can only get it when you beg and plead. So and it didn't go that way, but in any event, so you can do it down at the bottom right. There's a reset button, but we don't make it easy. We did it specifically that if you do hit reset, you have to shut down Ninja. So shutting down your workspace, saving everything you need to save, turning off or whatever you got to do. You shut down Ninja, you come back on, you load back up, you put up your workspace, you do your connections. It's certainly it's not a quick reset. So it does take all of maybe 5 minutes at best. But the point of it is that the whole purpose of it is it's not going to make it easy for you. You just can't say reset and get right back in again. So now you got to go in there and change your settings and all that kind of stuff. So it's designed like that on purpose, but you can do it if you want to do it. So let's go the positive way. Let's think positive here, optimistic. Goal. So now you've gone up and you've hit your goal. And so now your goal is, again, we say $500 or whatever it is. You made 500 bucks. And so now you get the warning that says, hey, congratulations, you hit your goal. Now your drawdown limits now apply, whatever they are. I'm going to talk about those. So you hit your goal. And you've got a couple choices. 1 o'clock, you could start drinking, we're done. Or, you could continue to trade, but you don't want to give back all your hard-earned money. So let's say that you have, if you want to go, you're done. So you just want to stop trading. You could do that. You would say after you've hit your goal, you're just zero, which is going to be zero. You're not going to give anything back. So if you do try to finish off the trade, maybe it's still moving, you want to touch the tail end of it, it's not going to let you do it. And if you think you're fast, you market order, it'll take you right out. So the other thing you could do is you could say, hey, I want 100%. So now I'm playing with house money. I usually do 90% for covered commissions, but the point of it is that once you've hit your goal, now it's only goal one. We have multiple goals, which was an added feature later on, but now you've hit your goal, and so you can you could continue to trade. But if worst come to shove and you lost it all, you're done. It's a scratch day, which you really don't want to do, but you can do it until at least you get to your next goal 2, and that might be a higher. And now you might want to say only 50% or 33%, 25%, whatever it is that you want to play with. But again, you as the CEO of your trading business, you delegate your rules to the discipline manager and allow it to monitor your trading employee, which is you. And your trading employee gets out of line, your discipline manager comes and controls your losses on your behalf, you being the CEO and your stockholders on behalf. And then, you follow at the following CEO meeting, you decide you want to change your settings, and you make your setting changes, and then you give it back to your trading employee after you've applied them. And now the employee, now trades with those new rules. And so I'll just run through these samples here. So we got a circuit breaker, and that's where that kind of came from, the actual stock market itself. So it's going crazy, you're not doing well, and you're down hypothetically 30%, whatever your number is. So you have 30%, and basically you get your timeout. And if your goal is set for 500, it'll trigger the circuit breaker. So it'll require a 15-minute timeout. And so that's basically the dynamic warrant. It's the same thing, only you've already hit your goal. So it might be different numbers and different percentages. When you first start for the day, you have, your first trade from, basically 0 down to the bottom, but now you've gone up and you've hit your goal. Now it may or may not be the same number. You might not want to give back as much or none at all. So that's where the dynamic comes in. I like to continue to trade because if the market giveth, I like to take it. So therefore, you hit your goal, and now you're safe. Now the psychology changes a little bit, and now it's just a matter of, okay, how much do I want to play with and get back. So again, you have to decide what it's going to be, and that's the whole reason of dynamic, because it changes. So I think you got the idea on this one. You got a realized balance of $1,000. Your warning, let's say, is 30% of that. So if you lose $700, it's going to give you a 15-minute timeout. Kind of if you don't even want that, you don't even have to have the warnings. Just put 999 in there and take care of that. And then as you go to your next balance, so now you've hit $1,500, and that's level 2, goal number 2. So now you may not want to give back as much. You might want to change those percentages. So again, you have the ability to do that. Now you'll see it in the settings here in a minute. But regardless, if that's what happens, if you do hit your dynamic drawdown and you hit that halt, then it's going to stop you on that, and you're going to end the day with the profit to be in the green, depending on what your numbers are. So the new version as of 2020, we added these few things here, the max trades. There's a little disclaimer on the trades. It's not, keep in mind, if you put on, let's say, a single contract, and you put it on, well, this is based on your account. This whole discipline is based on your account, not the indicator or not instruments. It's the account. So it doesn't matter what instrument you're trading, it's going to look at the account. So you put on an order and you get hit with the commission. That's a trade in its eyes, because it realizes hey, something has changed on my account. That's a trade. So that's 1. And now let's say you get out. Well, that's 2. So now you've taken 2 trades, even though it's 1 setup, if you will. So you got to kind of keep that in mind with it when you're doing that. And there's where I was talking about the level 1 and level 2, and then the weekly level 1, level 2. And the weeklies are basically the same thing, only higher numbers. So you can kind of plan on having 2 losing days back to back, but on your 3rd losing day, you might want to say no more. So those were added. It used to be just 1 goal, 1 weekly goal, and now we have multiples, so you could change the percentages. Anytime you want to change a percentage, that's where you want to go to the next level. And then one of the things back in 2000 or November of last year, we added the naked positions, and actually, because I've been doing a lot more with strategies lately over the last couple of years, and I don't like naked orders. Now, some strategies, they don't have orders on there on purpose, so you certainly want to use that. But if you're like me, who does like stops, whether you put them on or it puts them on, or if you use the ATM, whatever the case is, In a strategy setting, I've come to realize that sometimes naked orders are left on, and those are very dangerous. So we implemented this naked order. So anytime there's a naked order, if it sees it, we put a little delay on there, but I forget what the number is, but so many milliseconds. If it sees an order on your chart without a stop, it will just close it automatically. So that's a little safety. It hopefully never uses, but it's nice insurance policy. Unless you don't use stops. If you don't use stops, you'll get popped out each time. Then so you want to make sure that's unchecked. And then there's your stats. That's just an ongoing total. When you first start in the morning, your P&L and your peak and whatnot just says DNA does not apply or something like that. And then it goes and shows you your balance, what your peak was. That's the one I like to look at right there, peak. And then it goes from there. And then the last few things that we did is we added the set as default, because having to go there and change all your accounts all the time kind of gets old. So therefore, you can kind of set them. You can have one for minis and one for micros or something. But if you're always dealing with micros or minis, either case, you could just hit default. And then that way, when you do your next account, all those numbers will just pop in, and then you don't have to retype them all in again. So that was just an easy thing. And then the export, this allows, if you have any questions for me, or if you want me to look at some settings or something like that, you just hit this export. It'll throw a little TXT, notepad file on your desktop, and you just email that. And, so if you want to set your settings up, you could just shoot that little export thing, send them over to me and say, hey, these are my settings. And I have no problem at all of replying back to your email saying, okay, based on your setting, this is what's going to happen and when. And then you could say, well, that's not what I wanted. Okay, so that's the whole purpose of that. So, all right. So some of the drawbacks that we have is the main obstacle that we have is we can't suppress market orders. So we tried to get it so if you try putting on a market order, that it wouldn't let you do it at all, but we can't do that. So that's something that I know that they're talking about, suppressing manual orders. There's actually a ticket number with Ninja if you ever want to inquire with Ninja and say, hey, what's going on with SDT 3149? That's what that is. So that way you won't get hit with all the commissions, because if you try to fake the system out, or if your strategy, let's say you get out and you breach your rules, but your strategy, now you're gone having lunch and your strategy puts on an order, well, the discipline manager is going to take it right back off again. And then the strategy is going to say, hey, I want to put an order on it. And it puts it on again. And this manager says no. So unfortunately, it's just going to rack up some commissions. You don't want to do that. So hopefully we'll have the ability at a future date is to suppress market orders. So that's the kind of drawback that we're having right now on it. But other than that, it's doing what it's supposed to do. So how do you get started? Currently, it's being offered on a subscription basis. And the whole theory behind that is that, you don't need it forever. And so you could do it on month to month and then do it for a few months until you feel comfortable. Or some people I do know like to have it as a little, insurance policy, like you'd have insurance on your car, in case you need it. Or you could do some savings there at the annual price. It's a subscription. It's done on a PayPal. That way you control it. You turn it on, turn it off. I don't do anything. It's, you control when it goes on and goes off. PayPal makes it really easy. So how you would do that is you would just go to the webpage, go to tremper.com, and you go to tools. And then from there, you go down to discipline manager. And from there, you got price options there. You can click that button there above the little video, and you go into the PayPal thing, and you can get the free download if you want to play with it for a little while. But then there on the lower side of it, it has the subscription. You see there, it's got the annual, if you want to do the annual, and then there's even if you click on that little down arrow there, you can get the monthly and whatnot. So, but since you're here today, we do have a special offer. And what we're doing now is we're doing 30% off for a limited time. And again, it's only going to be for like 3 days. So it's going to be a quick limited time. But as part of this webinar, you could download this by using a little super secret hidden button on the tremper.com site. And that link is basically the same link, only it's got 30% off on it. And again, this is for the lifetime of the subscription, not just the first month or 2 months or whatever like that. It's just as long as you have the subscription. Once you turn the subscription off, well, then obviously if you renewed it, this would no longer be around. And how you get that is you go again, tremper.com, but this time go to referrals. I hide it a little bit, and I have a discount code page here. These are all prop firms and things like that, that are all these firms that, for money. Money's the easiest thing to get, really. But I have a discount code page there. And in there at the very, very, very bottom, all the way at the bottom, I have this one right there that says Discipline Manager 30% off, and it's $34.95. And that's down at the bottom of that page. And again, PayPal, if you're not familiar, it goes to your PayPal account, you sign into your PayPal account, and pick the credit card, and bada boom, bada bang, the rest is history. So contact information, if you have any questions, I could go through questions here real quick if there are any. But if you do want me, I'll just show this on here. It's just trumper.com. It's just my name. It's kind of simple. And then if you want to join our Skype group, you're more than welcome to join our traders group. We have just traders helping traders is all I like to call it. You could just search for info@trumper.com, which is the same as the email address, or you can go to the community page on the web page, and you could just I think there's a link there that says Skype link, and once we connect, I can move you in there. Of course, email, and of course, the phone number, which nobody ever uses anymore. So let me look through these comments here. It would be good to have an objective value for your stop loss based on instrument volatility. But that's your job, Mike. This manages your account. This polices your account. And it's your job to determine when to trade or when not to trade. And regardless, this is policing your account, and that's all it's going to do. So unfortunately, how does it know what you're trading, the volatility? And certainly something to consider and think about. But again, you've got to take some, right now, that's the trader's job. The discount again. So the discount, Kathy, is you say, we asked how to go. I go backwards here, I think. I go back. Go to referrals, and in there's a discount code. And what I do is, we have a lot of people that I'm always giving discount codes, or I don't give them, but I just publicize them. So there's one place to go. Basically, all these prop firms that have come up, they have these discounts, and for money, you got to, if you don't know what they are, you can kind of look into them. But in any event, the point of it is that I'm always changing these under, because they're constantly given different deals and whatnot. So I'm constantly changing this all the time. And so I figured this would be the best place to put our super secret discount code. And at the very bottom, all the way down the bottom of the page, you scroll down there, there's the PayPal account, which has the Discipline Manager. It's the same button as if you were to go to the regular Discipline Manager page under tools. So go tools, Discipline Manager, the price options, and then there it is. It's the same thing, only it is a different price, and it's only going to be there for a little while. So again, go to the main page, referrals, discount codes, and then way down the bottom, there's another PayPal link there that has a discount on it, and that's how it would take you to PayPal. We do need the machine ID. Ninja requires the machine ID, and I like the contact page filled out. You could, again, get that all from this page here, the contact, because then I can get your machine ID, and then if there are any updates and any communication, that's what we would, we would want to have. So, let's see. Do you have a bot trading feature as well? Well, this will police anything. It doesn't matter what you're trading. If you're trading a bot, algorithm, strategy, whatever you want to call it, I call it bot too. But if you have a bot running, it just taps into your account, and if it looks at your goals, and if your rules have been breached, it's going to stop. It doesn't know how your trade got on. It's just policing your account. So I do have a couple bots myself. I mean, personally, that you can find those under tools, also under strategies. But in here in the Discipline Manager, no, it's just strictly your account. It polices your account, and that's why I say you don't even have to have the window up. Once you set your settings and you hit apply, and it even has a little caution there. So do you want to do this? Kind of locked in. You get the big red line sentence down at the bottom that says, hey, you're locked in. It doesn't give you the ability to change your settings. They're locked in. They're gray shaded. So once those are in, then you're pretty much off and running. So you think it would work better than my discipline manager? Go take a nap. You think it would work better than my discipline manager? Who's that? You? Go take a nap. No, I don't know. We'll see. Jimmy. Let me see. Can MIT orders work versus limit? Again, this is managing your account. So it's not, it doesn't look at limit orders or stop orders. All it knows is that your account has breached your rules. Your account went under what it was supposed to, regardless of how you put on the trade or who puts on the trade. It looks at your account and says, you've breached your rules, or you hit your goal and now your new rules are in effect and you've breached those. So you're done. That's all it is. It doesn't have anything to do with how your orders are being placed. As far as are there any professional, I do know of a hedge fund that has multiple copies of this licenses, and they put it on all their algorithms. And just as a backup kind of thing, I guess. Again, algorithms are machines made by humans, and humans make mistakes. So it is running on some algos out there at a hedge fund, and they have multiple copies, licenses of it. And I think that's it. I think, Juanita, as far as time, I'm trying to keep to your 45 minutes, and I think I'm good, right?
Yeah, you just hit that mark. You're doing great. Am I good to go ahead and get the room closed out?
Yeah, I think I think I've got everything I wanted to say. People know how to get a hold of me, and any other questions, you're more than welcome to email, Skype, whatever.
Perfect. We just want to thank Steve with Trumper.com for taking the time to share with us today. If you enjoyed today's session, we hope that we will see everyone in future events. We'd like to remind you the information provided in this was that of Trumper.com and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see everyone in future webinars. Happy trading from everyone here at the NinjaTrader ecosystem. Thank you so much. Have a great day.